grading a price swing. So we have these levels here. The first one I drew your attention to was that weekly order block. Now, I could have very easily laid all these out here in advance and said, watch all three of these get hit. But you're learning. Your understanding is a graduated experience. What I'm about to say is not to be construed as talking down to individuals. Okay, I'm just reminding you where you're making the mistakes. You are. I'm not making the mistakes. I'm telling you to be careful. But if I say I like this level here, and you foolishly go out there and you try to trade with your money or risk your funded account on it or try to do a combine challenge and insist because ICT said it's going to go up here, between this point here and this point down here, there's lots of room for error. If you don't have a lot of experience or don't know what you're doing, or you're impulsive and you chase price, even if you do use a stop loss, you'll get caught up in these retracements that you won't expect or anticipate. And you'll walk away thinking this stuff doesn't work. And then now here we are, it goes right to the levels that I've talked about. So between these two price points, with this shift in market structure here, and running up into that weekly bearish order block mean threshold. Again, this level here, right there, let me take the fib off because there's more lines on here that I want to show you. That level here is not anything in this fractal of any importance. It's the weekly chart. It's this one here. The mean threshold. This is the halfway point of this candle, and that's done by like this. You take the fib, drop it on the low to the high, bam, right there, 104.540. That's why that level's there. It's half of that. Now let's drop back down into the daily. So we had a market structure shift here, and right away we have this fair value gap. Now watch, folks. This is not quarters theory, okay? Because you're going to hear somebody come out and say, "Oh, he's teaching quarter theory." I was doing this stuff before quarters theories was even talked about. This is what grading a price swing allows you. You have to know what. Where's the draw on liquidity? Where is the terminus? The end of the line. Where do you think price is going to go? It doesn't mean that's where it stops ultimately and reverses. Where do you see your setup form? Where's the framework? Where is the dealing range that you're going to work within? That dealing range is always in the past, high to low. We framed the equilibrium price point here, and we're aiming for a premium. Why do we want to see that? Because we want to see it trade into this fair value gap and above it, which would nullify, it would remove any need to anticipate lower prices on dollar. It's signaling to you algorithmically that it is not going to go lower. It in fact wants to go higher. So if we can do that, and we see it does, it closes here, that really increases the opportunity for this fair value gap to be inversion fair value gap. That means it's going to act as a resistance broken turn support, to use retail-minded logic. But this would never be construed as that because it doesn't fit any of the type of thing that you would expect with retail support and resistance, nor does it meet the criteria for supply and demand. This price range, okay, that I'm looking forward to if we get this shift in market structure, shift in market structure here on this candle here. At that moment, we have entered a buy program. So we have to go back into this range and anchor it to where we anticipate price going, that draw on liquidity. The initial one was here. This one, I don't believe I mentioned it, but I'm going to say I didn't. But you can see clearly it's anchored on the daily chart. But I did tell you this one here. This is where we want to see if it wants to get up into that. So all of this run here, we could be sitting still, anticipating, not reacting, anticipating a run above that short-term high here. Why am I talking about this high? Man, he finally talked about it. He's finally saying it. I've been screaming at this monitor, Michael, why are you wanting this high? Why didn't you use this high? Why didn't you use that high? Why not that high? Low, lower low, lower low. Okay? we consolidate. All through April and May, I'm outie. See ya. I want the market to show me something. So when I was down in Florida, when I was cruising around in my RV, and I don't live in an RV, goober, I want to see it move out of this range. Okay. Let's just for a moment, let's ring in the bond market. Okay. If you are on Twitter, I believe it was Twitter. If it wasn't Twitter,